Ladies and gentlemen of the crypto space, we're live at 11:31 a.m. on February 4th, Thursday. Let me preface my start of this stream. My preview in YouTube Studio looks weird, so please let me know if the video looks correct. That's what I'd like to start with. Does the video look correct? I'm going to take a pause. Watching the comments. Does the video look correct? Someone? Anyone? Got plenty of people in the stream. All right, let's proceed. It is what it is. I'm going to proceed with the stream no matter what. A storm is brewing. Reflation, no video. Looks good to me. Looks good to me. Excellent. So the video will come through, Lewis. If folks are saying 5x5, looks good. The screen is on. That is all that matters. Thank you, everyone. So we're going to talk about the storm today. There's a lot of stuff going on with long-dated bond yields, and there's some questions about short-dated bond yields, which Stephen Van Meter talks about probably the best out of anyone that I look to for information. I blasted off a nice tweet storm a little bit ago, trying to rapid fire the ideas that I most often think about, especially involving my day-to-day activities, portfolio management, value allocation, and it also plays into the stuff that I talk to you guys about, trying to share with you information in order to make the best decisions possible. Um, and it was a good tweet storm. Wish I had spent a little bit more due diligence, avoiding the typos, but it expresses my mentality, my perspective, my opinions very well. So that was pretty cool. If anyone has time, take a peek at that, and it's definitely consistent with the stuff that I talk about on the stream. I want to talk about potential reflation because that's what the data is suggesting, at least suggesting that the large market actors are gearing towards. Whether they're right or wrong is obviously surfaces the potential for a contrarian trade. With long, let's get in. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto, non-custodial DeFi, or nothing at all. Bam! Let's pop it over to the main screen and see who's in the stream. Charlie G's in the house. Good luck with the contest. Yeah, let's wait to the end. But I just posted on Twitter that it was a wonderful interactivity, great responses, uh, great. I'm just baffled and breathtaking that so many folks have interest in not just the project, but how I talk about it and why I see that it's extraordinarily significant and definitely one of the most unique projects in the entire crypto space. So that's great. That's great to see. Charlie D says, "Smash them likes." 24 people in the stream, 13 likes. We're doing something wrong, boys and girls. Kel's in the house. Always a pleasure. Storytelling. Updated my bio. That's what I'm going to do. That's what I'm going to be. I'm going to be a professional storyteller. The Tar, good morning. Always a pleasure. Lewis, so I had a little one rook giveaway contest. Lewis popped it on Twitter. It is what it is, and that time has come and gone, and the winner will be announced at the end of the stream. Igor says, "Noah story time." Yes, my friend. Uh, Theodis, don't kill me if I butchered it. Howdy, Jeremy, my man. Danny's in the house. Looks good to me. This was the video working commentary. Perfect. Good, good. Um, Vortex tweet was great. Thank you. It took me a fair amount of time, obviously, to express all those thoughts in hopefully a coherent and digestible fashion. Typos aside. Wife Wolf's in the house. Jamie's in the house. Best content around, period. Thank you very much. RR, my friend, always a pleasure. All right. So let's take a look at the long dated bond yields. So when long dated bond yields are up and short dated bond yields are either flat or down, that's by definition a steepening yield curve. And a steepening yield curve is basically large market actors expressing their opinion. And their opinion currently is the reflation narrative. Reflation means we're they're betting that we're likely to experience inflation and economic growth, which is overwhelmingly contrarian or contradictory to the joblessness and the steady yet decreasing uh, new jobless claims on a weekly basis that we see on Thursdays. So what does that all mean? That this leads to just extraordinary decisions we have to make as value allocators, particularly because the reflation narrative means assets just go up. But a contrarian trade is that they're wrong. And then in that scenario, bonds go through the roof, a liquidity event occurs, we have systemic market instability, the Fed likely, or just probably at this point inevitably steps in to fill the liquidity gaps, and we have a massive risk off event in the equities market. So I like to think bigger than that. Think bigger than that. And that is why I do this stream. I do the stream so persons that hear my thoughts and words have a capacity to be the smart money. Gives a shit if the equities market crashes. That's just the bottom line. Those gamblers, those retail speculators, and whatever, if institutions are participating in that absolute insanity, just it is what it is. I could care less. They're doing something wrong. Throwing money into a company with 1,001 P&E, with a steepening yield curve, and just an M2 velocity that's basically imploding. These people are insane. They're not. There's no narrative whatsoever that says, yeah, they're doing the right thing. They're doing a good thing. They're doing. They're literally buying the very tippity top of a market, with the upside being relatively trivial compared to the amount of appreciation that has occurred over the short-term history. What the last 10 years, the S&P is up 10x. Come on, how much further does it go before the market says these people are a bunch of idiots and the entire system liquidates, and then what I commonly refer to as the great value reallocation occurs? So that's where I like to really focus on my story. And our goal is not to find specific assets. That's why I don't talk about specific assets. All right, broadly talk about specific assets. Clearly, I talk about specific assets, but the point being, it's not about me talking about specific assets. It's about you finding the assets that fit your narrative, your story. I tell you my story to hopefully express some ideology that lets you evolve your own story. And what I find most interesting is almost everyone I talk to has certain assets that are very consistent with my positions and are also different. And one of the things I always say is you can't own everything you want to own. So there's absolutely substantial room for not deviations, but just not 100% consistency with the way I've allocated my value. So this is not a stream about me telling people what to get. It's a stream about me telling people how to think about what they get and what they do and what is value and what is occurring likely from the macro perspective that should shape the decision making process and how value is allocated. So we're going to be the smart money. That's it. I've seen a variety of indicators that I know for a fact, even Raul and Steven, and nobody talks about. And this is in the battery metal space, and that's definitely not part of a reflation narrative. Those assets are basically rock bottom penny stocks. It's the mining sector, the nascent technology, particularly with the boom of the EV space. And it's not even just the EV space. We're talking about industrial batteries for corporations, office buildings. We're talking about the power grid. We're talking about which is redundancy and resiliency in the power grid. We're talking about basically energy structure revolution, and that's what's upon us, and that's the foreshadow that the EV boom says is upon us. And you have to consider the time horizon: rebuilding energy infrastructure, throwing massive batteries at the base of corporate buildings with solar panels around. This is going to take years, if not a couple of decades, to fully execute. But that is the foreshadow that the EV boom says is starting. And what's most fascinating is I've been in battery metals for years, and they've been devastated. And follow Simon Moores on Twitter, and he's basically works operates Benchmark Minerals, and he'll talk about everything that you're going to need to know. Um, what So battery metals have been pumping, and that's meaningful. I don't mean that from an opportunistic and speculative perspective. What I like to talk about is hints and highlights and suggestions as to what's occurring, when it's occurring, and what it means. So I'm starting to see movement in the battery metal sector, which is penny stocks, which are part of the EV narrative, which is part further of the energy transformation narrative. Oil's out, it's done, coal's done. It'll take 10, 20, 30 years for this type of cycle to complete. But when faced with superior technology, more efficient, cheaper when mass manufactured, evolving, the amount of energy the batteries are storing is just increasing at an exponential rate, Moore's Law style. And to top it all off, as I said, the foreshadow with the EV boom, and now we have the hints. I have battery metals assets that are up hundreds and hundreds of percent. Um, Piedmont Lithium is up over 800%. It was up 1100% at one time. At one point, that's not part of reflation because they're rock bottom prices as compared to 1,000 to 1 P&Es. So the hint that it suggests is the smart money is allocating. Clearly, there's some degree of probably retail speculation. The folks that love to buy Tesla at $4,500 a share, because that's what you're doing at whatever it is, $800 a share pre-split would be like $4,500 a share. So no one in their right mind buys that, especially considering Sven wedges. Man, those things looks like they're ready to cut through the core of the earth. So and that the hint that smart money is starting to reallocate value towards the mining sector, probably broadly commodities as well, um, is a bit, it's not contradictory to the reflation narrative we see in the long bonds versus short bonds and the steepening yield curve. But what I find interesting is that there's even a larger perspective than just the short-term yield curve steepening, whether there's a reflation narrative or a crash in the broader equities market. And the bigger picture is really the great value rotation. So I've often said, what is a crash? A crash is hyperbolic, which means it's basically inflammatory. It's a dirty word. Oh, the market's going to crash. What the give a crap if the market crashes. What I give a crap about is where those trillions of dollars are going to flow to, because that's the smart money. The smart money is positioning themselves now, maybe as a hedge, because clearly the crypto market is just somewhat vertical at this point. So there's plenty of places to be risk on to make a lot of capital. Crypto market's unique unto itself because it's consistent with the reflation narrative, but also consistent with the great value rotation, which is absolutely fascinating. So the great value rotation says that in the event of an absolute equities market collapse, whether it's because of this a liquidity event, or maybe the yield curve starts to just collapse, like literally long dated bonds, just all of a sudden people are buying them tooth and nail, and the yields collapse, and just literally everything just completely reverses the current trend that's on. The reflation narrative completely evaporates. Um, but the equities market is at just unsustainable heights. You don't have a rising wedge like this that breaks up. Um, it's just that's just not what has occurred over the last however many years. We saw it in 2008 and 2000 with the massive, ridiculous rising wedges. So it'll keep going up, probably, possibly in the short term because of just absolute irrationality. But to be prepared for the larger equity markets, broader equity markets collapse, it's just being the smart money. And point being, there's absolutely no logical reason to be in those assets. There's no logical reason to be in the broader tech equity space, which is obviously Fat Bang and Tesla. And there's just no reason. And it doesn't matter how much you love the asset. What matters is the stock price is completely detached from reality in any regard. It's not reflective of the purpose of an equity. It's the ownership of a company, and the ownership of the company reflects the status of the company as fundamentals. I kind of feel bad for fundamental analysts, the hedge funds and brokerages in 2020, because they were useless. They were absolutely useless, and probably they were questioning whether their job was actually meaningful or not, whether they had any value retention or retainability. Um, but as I said, things are going on, and it's serious, and we're approaching an inflection point. You'll hear Sven talk about it. He's just angry. Everyone's angry at this point. How much further could it go? And at some point, something's going to occur, and it's not about fearing that. It's not about fearing the event. It's about being in position now, prepared for the event. I mean, folks are making cash tooth over nail, hand over fist in the crypto space at the moment. So it's not like you have to fear an broader equities market collapse to such a degree that you don't have positions now that are extremely lucrative. So you don't a broader crash doesn't mean, oh, I'm going to take all my money out of all my crypto and all my equities and my properties and put it into dollar fucking bills. No, that's the most insane response to a crash. You want to be in assets that have inflated less than the extraordinarily insanely inflated broader equity space. Because when a crash happens, if a crash, likely inevitably when the crash happens, the assets that depreciate least are outperforming the assets that depreciate more. So when the dust settles, the large market actors and even retail, which are going to be scarred emotionally and they're probably never going to touch the market for another 5 years, are going to apply their value to the assets that are outperforming the most. This is just basic fundamental human emotion at play here right now. If something's going down less as compared to something that's going down more, that asset is outperforming. And there's only a couple of sectors that are just completely uninflated. And broadly, the commodities, mining isn't even, they produce the critical materials list that the United States so desperately needs. But lithium, cobalt, nickel, and graphite are broadly not considered commodities. So but it's so part of the future, and it's so uninflated. These are penny stocks. These are tiny companies that have moved hundreds of percent in the last month, and it's so tempting to say that's the smart money getting into a position, applying value to a non-inflated asset, as compared to insanely applying value to the broader equities market, the broadly inflated equities market. Anyway, I'm going to keep going on the story, but let me see what's going on in the stream. Yeah. Squanchy's in the house. Uh, Zatar says Noah that folks can't explain the project work as a problem. Yeah, but that's don't I can't say to I will never say to just apply value. You understand a project before you apply value to it. If you see value in it as I describe it, then apply value. If you don't do it. There's absolutely nothing wrong with just a Bitcoin position. And you can't be in all Bitcoin. You gotta own commodities, you gotta own metals, precious metals included. And I would argue that there's no reason to not have a small portion of the portfolio allocated to a swath of battery metals miners, domestic Canada, U.S. domestic Canada, and Australia is the hotness because you're dealing with hard rock in Canada and Australia, dealing with brine in South America, and Nevada is going to be a hot mess because one of the largest lithium reserves is owned by Lithium Americas in Nevada, but they're likely pursuing a brine operation, so that's absolutely insane. Hard rock is just the most efficient and it's actually scalable. Brine is not a scalable way to mine lithium. Um, what do I think about DigiByte? DigiByte is the premier UTXO blockchain. Bear in mind, premier UTXO blockchain is real, and that's the truth, and that's my honest technological opinion. It's completely mutually exclusive from price action and potential consumption and adoption. Um, the asset's not ready for value allocation. It needs to get above the 200 EMA on the daily or the weekly. It needs to actually start to have bullish momentum. Otherwise, applying value to the asset at this point is likely going to be a value losing experience. Powell is targeting inflation, wants inflation, has stated, of course. The as what does Raoul say? Structural inflation, different than inflation. Inflation is a relative terminology, and it really can't be applied broadly. We want inflation. No, inflation is relative to a specific asset or a specific market. So that's what he wants, but that's just a talking point. And like, what market does he want it applied to? He wants does he want to inflate the broad money supply? Sure, he's doing that very well. Does he want food inflation, goods and services? Probably not. Does he want salaries to rise? Probably. Does he want equities to inflate? As Saylor talks about, the inflation of the equities is going to drive people to the crypto space and, frankly, to uninflated assets. The fuck wants to apply value to an inflated asset that has the potential to entirely deflate, considering their historically abnormal valuations right now? Shit. Anyway, you got that was a good one. Good comment. Um, I noticed that KeeperDAO has a token swap page. The gas fees are cheaper. Yeah, there's no gas fees on the KeeperDAO swap page. It's zero gas. Bear in mind, it's a limit order. Bear in mind, they just launched it. Also note that that is the technology that we've been waiting for, and it's obviously going to mature over time. What I know of the Ren team that is producing, obviously, KeeperDAO, they're prudent. They exercise due diligence. When they did ChaosNet prior to mainnet Ren release, man, they took their time, and Ren has proven to be reliable, stable, effective, functional, and it's doing what it's doing. So basically, based on precedents, based on the history of the team, I expect Keeper DAO to merely mature from where it is and grow and stabilize and expand. And you could probably draw parallels to what Ren did, because Keeper DAO carries all of the uh, fame or prestige associated with that team. That's what the team is capable of, and the goals and intentions and expectations and speculation for what Keeper DAO can achieve is one of the most enticing, exciting, and speculative plays in the entire crypto space at this point. It's my only risk-on position. My only. Um, Ken, thank you very much. It's 420. My man. I appreciate that. Crypto Monk, hi Noah. Every stream is great, but yesterday was an instant class. So thank you for your work. Woo! They're just going to keep getting better, better, and better. I've listened to the brains. I've listened to the brains. This is Raul's fault. He did this. He gave me real vision. He gave me the brains. And with those brains, with access to those personalities, my capacity to understand these systems from a 1,000-foot view, the macro perspective, has obviously grown, and just matured to such a degree that I'm starting to see not just what they see, but I'm seeing my own observations about how the system is performing, the system is behaving, and maybe even ideas that are a bit contrarian to theirs and how things may unfold. And the great value rotation, or the value that's flowing into the broader battery mining stocks. Come on, that is definitely an observation that is off the radar of probably quite a lot of people. Speculatively, quite a lot of people. So, man, I just am so grateful for Real Vision and what Raul started, and Santiago Velez is absolutely brilliant. Stephen Van Meter's brilliant. I mean, just Lynn Alden's brilliant. Brent Johnson's just incredible. The theories, the ideas. They have contributed invaluably to my capacity to understand these markets and make appropriate long-term strategic choices in how I allocate value. And even probably more so important is how I express these ideas that I have. That I've matured and grown to you guys, because I've made these realizations, but it's everyone that counts. And as the stream title says, it's time for the average person to be the freaking smart money. I'm so angry at the system. I hate the system because it's so stupid and deprecated and antiquated. And these boomers that think they still have control. No, shit's going to change. Millennials and the newer generations, they're old. They're wrong. And they're on the defensive. They're trying to hold on to the status quo system, and it will be futile because new systems are being built and they're being pushed out the damn door. Anyway, mass manufacturer of these bees, but what about the raw material. So Theodis, that's the deal. I don't care about the EV manufacturers. My play always has been the battery metal miners, because if you want EVs, you also need cell phone batteries. You also need the mega batteries for corporate buildings, the even mega batteries for power infrastructure. Think about the Northeast and resiliency for the actual electrical grid. You need gigawatts of batteries, and this is going to require. I can't. It's not even metric. It's I can't express the quantity of lithium, cobalt, nickel, and graphite are going to be needed to achieve what basically the EV boom has foreshadowed is actually starting. The value flowing into the battery metals miners is hinting is occurring, and it's actually starting, and it's going to take 10, 20, 30 years for this shit to play out. But smart money's getting in now. I was early. There's little difference between being early and wrong, but that's just what my gut says. Smart money is going to start getting into battery metal miners and broadly commodities as the equity space completely cannibalizes itself with the irrational value allocation that has occurred. Um, at this moment, equity's crashing up. Cool. I'll look at the S&P and I'll watch when that Sven wedge breaks to the downside and everyone starts crying. And then what? See, what? See, that's the point. Time horizon. Who cares if it's crashing up? It's going to crash up percent, tiny stuff. And sure, if you're a trader, you could capitalize on the volatility up and down, up and down. No, no one in this room is following me for trading advice. The average person knows nothing of trading, and even I shy away from trading. I want no risk. I want yield. I want recurring revenue streams. That's gone in the legacy financial system, but that's vertical in the DeFi space. So what I try and share with everyone is actual implementable psychology and strategy and how to deal with your damn money, not for a 5% rip to the upside in the stupid S&P or whatever, dare Tesla do another 20% rip to the upside, but the 50,000% when you have trillions of dollars rotate out of the collapsing equity space and reallocate to the completely non-inflated commodity space, the nascent battery metal miner space, to facilitate the oncoming EV revolution or the energy storage revolution. That's the whole point. It's just bigger than just a specific thing. It's bigger than EVs. EVs have nothing. It's like 2% of the amount of material that's going to be required to transform global energy transmission and storage infrastructure. So, picture, boys and girls, big picture. There's a lot of stuff. The macro is crazy. The wicks on Rand, the wicks on Rook are now to the upside rather than the downside, indicating that this resistance may hold for now. Does your bias remain unchanged? I don't have a bias necessarily about it. What I have is a technical analysis. Let's take a look at the chart. So that is a quite interesting observation. So what this is right here um, has to be cost basis reset, ranging between two particular values. One, resistance flip support means there's tremendous buying pressure on this green line, which is far from where it is. It's probably like two. There's probably like three and change down here at the green line. And it's hitting resistance for whatever reason. People are taking profits. You rip from 350 to 600. This wick right here was the all-time high at 622. People are going to take profits, but there's the problem. Traders make money. Investors make the real money. The people that see things with a different time horizon, that see the big picture and where things are going. Now, EIP 1559 is a game changer. It's not going to be implemented because miners want their revenue, and there's too much value to be extracted from the attacks on the Ethereum mempool. It's worth countless millions of dollars on a daily basis. It's not going to be implemented. So I mean, it can. So the point being, either it's implemented or the status quo mempool remains as is. And if the status quo mempool remains as is, the only avenue for a solution is to fight fire with fire, to attack the dark forest. And that's the purpose of Keeper DAO. That's their mission statement. That's their goal. So unless there's a radical change in the ecosystem via a complete significant change in the way Ethereum operates, which will require consensus from the entire mining community. Nothing's going to change. And the fact that money's on the line regarding this change, that is a complete disincentive for the change to occur. Combined with the fact that this protocol has a net positive effect on what is occurring in the DeFi space. I see just resistance to EIP 1559, and I see a need, a desire, and an adoption for technology that mitigates the reality of the dark forest. This technology has a capacity to significantly improve the DeFi experience, and that is the broadest statement I can make about keep her down. These wicks to the upside, great. What I care about most is that green line. That green line is bullish. Above that green line, and this is bullish. Below that green line is max risk, max reward. You hit that trend support, you're in max risk, max reward territory. You know, this thing could just keep going to the side and start hitting that red line above the bottom green line. But this pattern, generally speaking, is an ascending triangle. So what's happening is it's proven support for 20 plus days, massive amount of support in that green line, and what you have is it's hammering resistance, hammering, hammering, and what's happening is a value rotation. The liquidity, the folks that have a capacity to turn a profit between 500 and 600 or 300 and 500, they're cycling out slowly but surely. And what's happening is, generally speaking, is a cost basis reset. It's a flooring process. And when the average, the prevailing market participant has a cost basis of 354, 500, they want gains. And they're in it for a different time horizon. And they're in it maybe for the technology or the long-term vision of the project. So they have a very different play in mind as compared to buying low and selling high type normal bullshit, type greed bullshit. So at some point, this is a classic pattern that breaks to the upside. And now the speculative play is how far does it break to the upside? And that's what excites me. And that's what's interesting. What I see in this chart, generally speaking, is support and upside to come. I think in terms of up and down. I don't think in terms of price targets. I apply value to assets that have a higher likelihood than not to appreciate. And I allocate away from assets that have a higher likelihood than not to depreciate. Anyway, let's keep it going. Thoughts on Ren and SBF deal? I'm mega bullish on that. I think the Ren team has a large degree of altruistic nature to them, and I think there's only good intention in this relationship. Um, Zach, my mentality is elite. Thank you very much. I hope I can help. I hope I do help. And I'm just going to keep doing this because I like telling stories. It's 12:04, but I'm going to keep going. We are not stopping right now. Charlie, why hasn't Ren moved up in price as much as Rook? Unknown. Price appreciation is obviously a speculative process. Maybe it doesn't have as much virality as the other assets, but its systemic importance is undeniable. Let me take a look at the price real quick. I mean, guys, Ren is ridiculously priced. It's 73 cents. This shit was 6 cents in March of last year, and it was 2 cents probably at the end of 2019. So this is an absolutely incredible price appreciation experience for Ren. That's incredible, guys. That's everything. That changes everything. So I can't speak to necessarily applying value at this point. You don't want to see an asset go up in price excessively. What goes straight up comes straight down. What you want to see is exactly what's occurring for Rook. The only disconcerting nature of this is that it's a relatively new asset. But if this is like Aave and it went horizontal for 20 days, if this was the Aave chart, right? Oh my God, the potential would be absolutely incredible. This is a flooring process. This is a cost basis reset process. Crazy, crazy sauce. White Wolf not promoting another YouTube channel. Know about who asked Elio Trades did a deep dive explaining how Rook works last month. Lovely, wonderful. If I have time, I'll take a peek. I encourage everyone to absorb as much information as possible. Jeremy, any crypto platform where I can invest in mining stocks, equities. It's not crypto. You'll get synthetics and derivatives, but the market isn't there. You probably get stuff on like FTX. Clearly, synthetics is heading at the direction, but that's a long time coming. You go with a brokerage account, Fidelity, E-Trade, so on and so forth. Charlie G, I go on rants. I do, my friend. Squanchy, epic, love it. Wow, hit them likes. We got 38 people in the stream, 21 people with the likes. Smack those up, thumbs up buttons, boys and girls. Lewis, yield. I have my BTC and Ethereum earning yield in Celsius. Thank you, thank you, Noah. I thank you guys for seeing what's happening. BlockFi, Celsius. Cresco, Cresco Fin is crazy. But not that you're going to, participate in Cresco Fin. Those boys are for family offices. But what's happening is the emergence of corporations that are going to capitalize on the fact that banks are garbage. It's useless. Cresco Fin is fascinating because they offer. It's an insured account, so that's basically equivalent to FDIC. If the position goes sideways, it's paid from insurance, so it's a 3% yield. And I have a feeling, I have a gut instinct that Gemini. That's what Gemini is doing. They're offering similar percentages. I think they're just a gut instinct. I don't know, but I think they're heading down that road. And Gemini could just be huge. And this is so heading in this direction of just completely deprecating banks. So all you need is a critical mass, a little bit of virality, and dare you say you have a bank run. And who the hell is going to keep their money in a bank earning 0% when you could earn 3% while being positioned in an asset that is likely going to experience asymmetric price appreciation just continuously? Bitcoin. Um, Heard of NDX? I have not. Take a look at Aave now. Yeah, what is it, like 450? Igor, yeah. Oh my God, 489. This thing has just ascended my portfolio ladder. I only had a small position. I had a lot at the beginning. Did a lot last year, but my small position has tripled in price. Crazy. That's 300% there. How long do you think we can keep the risk on bets, Noah? Yeah, that's a great question. So I manage things based on stories, whether the story changes or not. So as of right now, the reflation narrative is the case. Um, Clearly, if that story starts changing, you probably want to, I wouldn't exit the positions you have. You've allocated value to the positions you have, not because of just gambling, but because these are the assets that are forming the foundation of a financial system, an actually functional financial system, rather than a failing, contracting, and collapsing legacy financial system. So the longevity and the future of these projects are basically undoubtable at this point, or just incredibly likely, really likely, undoubtable that they're going to mature into what it's obviously going to mature into. So the allocations and the positions are correct. The only thing I would say is reasonable to consider is the position sizing. What you may want to do, as I often say, is you sell on the way up and sell on the way down. But the problem is, barring a systemic event, like a systemic risk-off event, um, retail isn't in the space. Retail isn't here. Retail is here when what's Aave at? When Aave's $4,000 and it's a $50 billion asset, and Ethereum is a $500 billion or 750 bill, or even $1 trillion. And when Bitcoin is $250,000, this is when retail gets into the space. When synthetics is $100, $200, when Curve is $50, when Rook is $10,000, that and Polkadot is $400. That's when retail's in the space, and that's when the blow off top occurs. Now it's almost inevitable that'll occur again. That's what happened in 2017. Retail just they have no idea what they're doing. They're completely emotional, and the sign of depreciation when it goes down 5-10%, they can't handle it, and what that triggers is the cascade. And all you have to do is look to Doge and XRP to see that process play out. What goes straight up comes straight down. What we're seeing right now across the broad crypto space is none of that. What we're seeing is cost basis resets. We're seeing appreciation, stabilization, a little bit of retrace, and it finds a bottom, likely on a trend, likely on an EMA, and finds support because there's more buyers than sellers. People are just taking profit on the way up, but the buyers step in because it's a good cost basis for them. And it's just not an irrational market right now. That's what I just got to reinforce. Unless that story changes, if it becomes an irrational market, that's when you sell on the way up and on the way down. If it goes straight up, it's going to come straight down. If it goes up, comes down, goes up, comes down, that's a rational market involving cost basis reset experience. Um, what am I missing? What am I missing? Yeah, heirloom. Anyone else repeat what Noah's saying because he did, because you didn't hear it and realize it's a live stream and you can't. No, 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 no. Heirloom, all my videos are live on YouTube. Always. They're always there. I have 190 plus videos at this point. So keep an eye. Pop on YouTube, look through old content. My newer content is obviously better than my older content, but it's all meaningful. Obviously, my mentality and my capacity to tell a story has bettered over the months and months that I've been doing these types of streams. Let's take a big run real quick, and we'll wrap up the stream with one Rook contest winner. All right, so it's technically it's in a disconcerting position. I was hoping for a break to the upside, a retest. Resistance, flip support, and then the higher high. We haven't seen that. What we had was is a failed breakout. Falling back into the symmetrical triangle and finding previous resistance. So this is likely to proceed within the symmetrical triangle formation, and I account for what's in the blue circle as how I call it an aberration, which is a temporary deviation from the trend. What you look for is the same thing as you always look for in the symmetrical triangle. The story changes if you have a break to the downside through support. And then at that point, you're in a bearish type of mindset, and you're looking for support to flip resistance in the fresh lower low, which is the antithesis of the resistance flipping support in the fresh higher high. Green guppy short-term moving averages were above the long-term EMAs on all time frames. Man, this purple line is pretty cool. That was a significant previous resistance. This is a lower, it's not a lower high, so technically it did wick above this previous top, so lower high up here, lower high, but this was higher than this previous peak, and this is higher than this most previous peak as well. Wicks, not candle body closes, but still significant nonetheless. All in all, this is just a wonderful market to watch and observe and know that the Sailor Bitcoin conference is going full steam ahead and that the dollar sucks. Equities are about to explode. The great value rotation is upon us, and I sure as hell want to own crypto rather than any of the garbage they're throwing around out there. That's the bottom line. Ladies and gentlemen, let's wrap this up 12:15 on whatever day this is. I don't even know anymore. I received a huge amount of feedback and responses regarding Rook, and it was a wonderful exercise. I can't guarantee that I'll do giveaways again. Most people find it distasteful on social media, but I wanted to give something, and I wanted to, just highlight the significance I see in the Keep It Down platform. It just stands out to me amongst countless projects. There's a lot of projects out there that have technical capability, meaning they're in a position with technicals to significantly outperform the market, and they're meaningful in their own right. But you can't go ill and you can't spread too thin, and just I allocate value typically in a risk-on way to a very specific asset, and that's quite consistent with what Warren Buffett talks about. You got to make a concentrated bet. So my broader portfolio is quite diversified with very decent position sizes, most of it yield over the months and year at this point, that have appreciated significantly. But they're minority portions of the portfolio, and I typically only apply excessive value to a single risk-on position at any given time. Particularly, all things considered, this thing has an absolutely breathtaking technical trend setup. Even if it breaks 100, 200% to the upside, that's incredible. That's life-changing gains, boys and girls. So, give deep thought to the way you structure your portfolios, have risk in mind, and don't fear. Don't fear an equities market collapse, and have a time horizon that's greater than 1 month. The equities market collapses, if you look over the 1 month time horizon, things are going to be devastated. It's carnage. It's like a tsunami coming ashore. But that tsunami recedes, and what you want to see is what trees are going to grow when the tsunami recedes. And sure as hell, it's not going to be tech equities trees. It's going to be the shit that wasn't devastated as much during the tsunami. All right. As I said, great responses, but the clear winner, the person that provided overwhelmingly a great technical response and three parts to the response, um, just definitely expressed a reasonable, meaningful understanding of what's involved, and is a great participant in the community, is incredibly valued and definitely appreciated. Charlie G, you get one rook, my brother. You did very well. I'm proud of you. It is not something to take lightly to be able to even regurgitate ideas. Just to regurgitate an idea is meaningful, but you didn't regurgitate. You didn't paraphrase. There was a degree of comprehension in the way you crafted the content of that Twitter post. So, I don't. It's not even a congratulations. I say thank you. Thank you for what you wrote. And how you wrote it, because it expressed that I'm not just doing this for shits and giggles. It expressed that I'm doing this and it's actually having an impact, and there's meaning to what I'm doing. So I'm going to ping you on Twitter. You'll throw me an Ethereum address, and we'll take care of that. Ladies and gentlemen, the Crypto Space, 12:17 p.m. on Thursday, February 4th. My birthday's on the 24th. 37 people on the stream, 26 likes. You guys need to smack that thumbs up button. Thank you, everyone, for joining. I will see you all tomorrow. Peace.